Okay, so let's have a look at question 1 that I set you. So this is our trial balance that we have. It's a little bit different. So a couple of things that you might need to know. So purchases is always a debit because it's an expense. Sales is always a credit because it's an income. Down here then we've got debtors and creditors. So your debtors is on the debit side and your creditors is on the credit side. So let's have a look and see where to go. So purchases goes into the trading account. Sales goes into our trading account as well. Carriage in down going to a trading account because it's going to increase our purchases. Wages goes into your expense or your profit and loss. Light and heat is the same expense and profit and loss or profit and loss. Carriage out is going to be an expense or profit and loss. Insurance, expense or profit and loss. Advertising, expense or profit and loss. Internet and telephone, expense, profit and loss. Your loan goes into the finance by section of your statement of financial position. Bank then, so bank on the debit side means that it's an expense. So it's going to go into it's an asset, sorry, bank on the debit side is an asset. So it's going to go into our current assets in the statement of financial position. If the bank was on the credit side, it'd be a liability, so it'd be a bank overdraft. So just be careful of that. So bank, the debit, it's an asset, and if bank is on the credit, it's a liability. So that means that it's going to be a bank overdraft. Open stock goes into your trading account. Debtors and creditors, so your debtors will go into your current assets in the statement of financial position, and your creditors will go into your creditors due within 1 year in the statement of financial position. Equipment, fixed assets in your statement of financial position. And remember that with your equipment, you're also going to have depreciation that's going to go into your expense. Motor vehicles then, the same. So it's going to go into your financial or fixed assets, your statement of financial position. In this question, we've also got depreciation, so it goes into your expense. Premises then goes into your fixed assets in your statement of financial position. You don't have any depreciation that, but it doesn't go into your expense. Your reserves are going to go into your appropriation account. Your income statement, your dividends are going to be taken away in your appropriation account, your income statement, and your issue capital then is going to go into the finance by section of your statement of financial position. Other items then that we get in the question, we've got share capital of 200,000, so that's going to be your authorised. And that's going to go into your finance by section in the statement of financial position. Your closing stock goes into your trading and current assets, so it goes in twice. Depreciation then goes into your expense and your fixed assets. And motor vehicles then is an expense and it goes into your fixed assets and so on. So the first item you want to do, your first statement you want to do is your income statement. So we'll go through this. So remember, put in your heading. So your sales, 98,500. Your opening stock, 202 or 2,200. We got purchases and we got carriage in, so you're going to add those two together to give us one figure that's going to be added onto your opening stock. So your purchases, 35,000, your carriage in, 350. That's going to give you 35,350 when you add them together. And then you're going to add this figure with your opening stock to get your cost of goods available for sale. And that's going to give us 37,550. Then you're going to take away your closing stock, which is 6,200, and that's going to give you cost of goods sold, 31,350. So that's going to be your cost of sales or cost of goods sold. That figure is going to be taken away from your sales figure, so it's going to give you a gross profit of 67,150. Then we've got all our expenses. So we've got wages, light and heat, carriage out, insurance, advertising, internet and telephone, depreciation of equipment, and depreciation of motor vehicle. Now, how do we get depreciation of equipment, depreciation of motor vehicle? So it tells in the question, equipment is depreciated at 12%, motor vehicles depreciate at 10%. So we find the value of equipment and the value of motor vehicles. So equipment is 22,000. So what you're going to do is take 22,000, you're going to multiply by 12%. So I multiply by 12%. So it gives us 2,640. You can take your motor vehicles. Let's multiply by 10%. For 15,000 divided by 1. So that gives us 1,500. So 2,640 for equipment, 1,500 for motor vehicles, and wages 36,000, light and heat 2,200, carriage out 120, insurance 1,200, advertising 320, internet banking 1,200. They're all taken from the trial balance themselves. So you're going to add all them up together and you get total expenses of 48,060. That then is going to be taken away from your gross profit. It's going to less your expenses from your gross profit. So your net profit is going to be 19,090. So your appropriation account then so how is that 19,090 divided out in the business? In the question, you've got dividends. The dividends are paid for shareholders, so it's going to reduce this figure. So it's 12,000 take away 19,090. So that's going to give us 7,090. And then we've got reserves at the start of the year. So that's money that we have. So that's going to increase the figure. So you're going to add 25,000 on to 7,090. And you're going to get 32,090. That's a reserve figure. Remember, that reserve figure goes in the finance by section. The next one then is your statement of financial position. So in this statement, we've got fixed assets, current assets, creditors due within 1 year, and your finance by. So our fixed assets, long-term assets for over 1 year that the company uses. So you've got equipment, motor vehicles and premises. The equipment at cost is 22 for equipment. Remember, we've got depreciation from our income statement, which is here. So that's 2,640. And we take those two away to get the value of our equipment now, which is 19,360. Your motor vehicles, once again, taken straight from the question itself. So we've got motor vehicles, 15,000. We got depreciation of 1,500 from our income statement. And you're going to take those two away from each other to get 13,500. Your premises then, straight from the question. Premises, 107,000. No depreciation. So we're just going to take it away. Or you're not going to take anything, it's going to go straight in for your net book value as 107. Add up this, your cost, 144. Add up your depreciation, 4,140. And take those two away to give you 139,860. Next setting, current assets. 4 things that goes in, closing stock, debtors, bank and cash. This question we only have 3, closing stock, debtors and bank. So your closing stock, 6,200, debtors 4,000, bank 22,600. All taken straight from the question. So you got your bank, you got your debtors on the debit side, and you got your closing stock. Those 3 are added up together, gives you 32,800. We're going to take away any creditors or any creditors due within 1 year. We usually have 2, which is your creditors and your bank overdraft. We only have creditors in this question, no bank overdraft, so it's 1,000. So that means 32,800 minus 1,000 will give us 31,800. That's our working capital. It's what we use for the day-to-day running of the business. So that's going to be added on to the 139,860. So that's going to give you 171,660. Finance by section then, we have 3 items, capital, loan and reserves. So your authorized capital in this question is 200,000. Your issued capital from the trial balance is 120,000. You have a loan then as well in the question of 19,570, and then the reserves is 32,090 is taken straight from the figure we have here in the income statement. And that will give you 171,660 and the two of them balance. Hope this makes sense. If you have any questions, make sure that you send me an email or contact me through Teams.